Hello there and welcome to my channel Simply Stocks, and today I'm going to talk about polycab, which has strong fundamentals but has the stock run up so much, whether you should get in right now or not. We will discuss about that, so let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Polycab, here's a small request. Kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get that $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put out from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can become a member on YouTube and get all the benefits of Patreon there, or you can be an yearly or an annual member on WhatsApp as well. Now about the company established in 1996, Polycab provides wires and cables for household, one of the renowned brands at the moment. In fact, after Havells, it has taken over as the market leader in this space of, you can say, electronic products as well as wiring. It has businesses in engineering, procurement, construction projects, manufacturing and trading of electrical wiring accessories, electrical appliances, and agro pipe and pumps. The market cap of the company has swelled to 47,000 crores and the stock has moved up 22% over the last 2 3 months. But let's understand about valuations, etc., and how the results have panned out. So as far as the financials are concerned, these are Q3 numbers. So they had a growth of around 12% in terms of sales, whereas on the, you can say, on the profit front, they grew by around 15% to around 360 crores. It is a zero debt company. Remember, the base was higher because of higher demand during the pandemic, because of people furnishing their home, refurbishing everything that they are doing at home with their wiring cables, etc., and the electronic products that they were bringing in more during the pandemic, because it was a work from home environment. So things started to pick up at that point of time, and now we are looking at a scenario where the markets overall has opened up completely. And so on that higher base, to have a 15% profit growth, 12% sales growth is pretty decent. Zero debt company, low promoter but high institutional holding at around 40% is pretty good. Return on equity of 21% is decent. Margins have improved to 14% from around 11 12% 1 year back. It was hovering around, the margins were around 18 20% 3 4 years back. So hopefully they'll come back to that over the next couple of years or so. So this is the revenue picture, and basically this is a 4 year trend, actually not a 3 year trend. But on FY23 basis, I have just extrapolated the numbers, and probably I'm looking at whether FY23 would come out to be like that. So this is the projected number for FY23. So from around 8,000 crores in FY19, we are going to see over 14,000 crores of sales in say FY23, which is a decent CAGR growth over that period. And on an overall basis, it's around 6,000 crores or 75% over, you can say, 4 years, which is around 15 16% and CAGR. Then if you look at the profits have gone up magnificently from around 500 crores in FY19. We expect profits to be around 1230 crores. That is around a CAGR of 24% 25%, which is again very decent, more than doubling over 4 years. So that's decent. Again, margins from 12% dipped to around 10% during the pandemic, but it has again come back to around 14%. And this is the biggest reason why the stock is trading at all-time highs, is that the margins have expanded over the years, and they are not seeing any margin pressure in a very difficult business environment at the moment, whereas other companies are in difficult situation at the moment. In terms of segment-wise breakup for the company, we have wires and cables contributing around 84% of the business, that comes in, and I think it's going to pick up as construction activity picks up. I'm sorry for the voice behind. There is construction activity going on around my house as well, in neighboring houses. Fast moving electrical goods contributes around 9%. Remember that 4 years back, this was around 2 3% of the total, you can say, holding. So it has gone up sharply, and their products are selling, especially fans, are selling big time. What is happening right now is that 9% for FMEG could grow even further in the next 2 to 3 years. 7% comes in from other activities, which is construction activities, and in other segments that they work in, EPC, etc. So before I go to the important pointers, let me take you to the screener website to understand as to where the stock is, how the valuations pan out, and where I feel that the stock could head to. We will have a valuation check as well in a bit. So let me take you to the screener website and let's discuss about what is the current scenario with the stock price and the current PE, etc. So the stock is hovering around 3,000, 3,100. It is around new highs at the moment, and I feel that it is slightly stretched. 46,000 crore market cap at trading at 40 times earnings. I feel this is probably the PE that it's going to trade at. I don't think this PE is going to, you can say, expand more. In fact, if anything, the PE could shrink more. ROE of around 17 18% is growing at the moment. But this is the thing, profit variance over 5 years has been around 31%. So the profit growth has been pretty good, and the stock is trading at 3 and a half times sales, which is not expensive at all. So this is where the stock is. It is well above its 50 DMA, well above its 200 DMA, and that's why I feel it could correct from here. We have discussed about the numbers overall. Let me just have a look at, and let me just give you an idea of the balance sheet. Reserves have grown from, in the last, you can say, 3 years or so. Reserves have grown appreciably over the last 5 years. So from around 100 and you can say from around 1850 crores, it's now up to nearly 6000 crores. If we probably see, if the March numbers come out, it would be closer to well over 6000 crores in terms of the reserves. So that has grown 3.5x, which is pretty good. Cash flow activity has been pretty good. Cash from operating activity is pretty decent. And if you look at the debtor days, that have gone down from around 60 to around 40. We have a situation where inventory days have also dipped sharply, and so this is pretty decent, and this is where the stock is making new highs, etc. We have FIIs which have increased their stake from around 6.5% in September to around 8%. We have DIIs who have increased their stake, who have remained stable at around 10% and have not decreased so much in a very difficult environment. So overall, I believe that things are looking much better on that front. But these people invest for a 3 4 5 year time frame. On a shorter term basis, I think the valuations are a little bit stretched. So we'll discuss about valuations in a bit. Let me get you back to the presentation overall. So it is a leading player in wires and cables with 18% market share at the moment. These are the important pointers that I want you to have a look. 3500 plus dealers and reach at around 125,000, you can say, places. Now have expanded into a number of consumer products as well. FMEG revenue has grown at 47% CAGR over the last 8 years, and that is what I was mentioning, that their fast moving electrical goods business have grown extensively over the last 7 8 years, has 25 manufacturing facilities, 4 for FMEG products especially. So I think their electrical goods business is going to pick up big time. If that happens, then I think the you can say the PE might go to 45 50, but even at around 40 42 times, things are looking pretty stretched at this point of time. So the stock could go up 18 20% from here. but not much of an upside from these levels, I feel. But the company over a 3-year period could end up doing very well. They are looking to do backward integration for its products, and hopefully going forward they should be, I mean, looking at, you can say, having some sort of you can control over the products from which these electrical goods are made. So that is also a very positive sign. Now looking at the valuation, so current EPS, I mean FY22 EPS came out to be 61. We expect FY23 to have an EPS close to 80. That's a good 30% growth. It is currently trading, as I said, 38, 39 times FY23 numbers, which is not cheap at all. FY24, I see more growth, so I won't be surprised if we see 105, 107 rupees EPS. I feel that the stock could trade at only 34, 35 times, and that's where I feel that over a 1 year period, in the next 15 months, we could see the stock at 3600, 3700, and not beyond it. So what that tells me is that it is a very good buying opportunity on very bad market days, on when market declines sharply, or when the stock falls because of one reason or the other. If this goes down to 2800, 2900, those will be very good levels to get in. And over 1 year, you could, from 2800, you could easily get 30-35%. And then going forward, if the numbers expand, say by FY25 or so, or by end of FY24, numbers expand, then we could see the stock trade even higher than, say, 35, 3600. So that's what my understanding is. I feel that the stock could go up another 10% from here, but there could be either a consolidation or a decline that could be under process over the next 8 months or so. So my assessment is that from a 3-year point of view, it's a buy at these levels in a staggered manner. You can buy here, buy at 2900, buy at 2800. I believe the best buying range is between 2800 to 3000. I feel that in that range, you could see that the stock could stabilize there, and below 2700, it's a steal at these valuations that it is at the moment. Very good long-term portfolio stock, and looks like a consistent performer for the next 3 years at least. But allocate less than 10% of your total holding. So this was a video on polycab. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.